Hello, it's 6 p.m. GMT on the 9th of March 2023. That can mean only one thing. We're about to join Payoneer and SellersFunding as we talk about financial solutions for global success. Hello everyone, my name is Mike. I'm the head of partnerships here at AVASK, and I'm delighted to be joined today by two fantastic members of the AVASK partnerships, AVASK partners. We've got Mike Cass, who's the director of sales from SellersFunding, and Luke Fagan from Payoneer. So hi guys, delighted to be joined here by you today. How's it all going?
Hi Mike, all
great, thank you Mike.
That's brilliant. Okay, so guys, I thought we'd just start. We'll start with Mike Cass. Did you want to tell us a little bit about SellersFunding?
Yeah, sure thing. So SellersFunding, we're pretty Ronseal, to be honest. We do what we say on the door. Basically, we fund e-commerce sellers across the globe. Our main markets are the UK, the US, Canada, Australia, and certain EU geographies on a case-by-case basis. So that's direct lending for working capital growth and all kind of things in between. We also do have a smattering of other financial products as well. So we've got a digital wallet for kind of FX pass-through into circa 36 different currencies, I believe. We have a corporate card as well. And we've got a number of other products in the wings, waiting to be put out into the market at some point later this year.
That sounds absolutely wonderful. Thank you. And Luke, hello, welcome to the Global Expanders. Do you want to tell us a little bit about yourself and Payoneer, please?
Yes, Mike, thanks for having me. So Payoneer is a global payments company. So we help online sellers, whether you're an online seller, whether you're an e-commerce seller, we help you send and receive global payments through our virtual wallets. So if you're transacting in any majority of cross-border currencies, we will be able to help you to send, receive those payments, and also pay your VAT in those local areas as well. We can also give access to working capital for Amazon sellers if need be, and also we can just help with that overall kind of structure of you having your global payments all in one place.
That's marvelous. Thanks very much, guys. Well, it sounds like you guys are both titans and heavyweights in the industry, and I suppose that's one of the reasons why we've got you today onto the show, which is going to be focusing on the financial solutions for global success. So what do we mean by that? Well, I think we've seen a great deal of instability with the costs of bills increasing very recently, and you've seen that there's been a great deal of instability in the market, and what we thought was going to be sort of boom, boom, boom has sort of stagnated and slightly fallen by the wayside with the effect of a global impending recession. And we are obviously experiencing some of those effects at the moment. So I suppose my first question to the panel in your respective industries is, how is this sort of like instability, how is it affecting the opportunities that are available to e-commerce sellers and the markets around the world? Do you want to go ahead, Mike?
Yeah, sure. I was just going to say I'm happy to take first go. So look, I think everyone's pretty clear that we're in a pretty tough market. There's a tough market in loads of different respects. If you rewind back to this time last year, we had just had the invasion of Ukraine, which sent a lot of things spiraling in different directions. Macroeconomically, it led to fuel crises and all of these other things, grain crises and things like that, and all of that's had an effect on inflation, and that's the rising cost of bills, and all of those things. However, in the e-commerce space, we've really been dealing with rising costs probably since before that even. We had the shipping increasing costs probably towards the back end of 21, which has thankfully now started to abate. And a number of different kind of supply chain problems that were caused by the COVID lockdowns and all those kind of things. So I think e-commerce businesses are pretty accustomed to dealing with a number of different threats to their prosperity and their growth. So I think at the moment, I'm sort of predisposed to being quite optimistic. Any threat brings with it opportunities. So I think for businesses that are really they really know their customer base, they know which SKUs to focus on in terms of what's the most profitable, which different categories are flying off the shelves, and where are they going to be able to make the most margin from XYZ different products. I think for those types of businesses, they're always going to be able to find a way to grow, and they're going to be able to find those markets to grow into as well. I'm a real believer in that, and I think the businesses that have got that kind of North Star, and they've got all of they understand their metrics and their products and their clients really well. I think they're always going to be able to grow. To be honest, I think that's the optimistic side of me.
That's wonderful. And Luke, how about you from your perspective?
Yeah, from my perspective, it's pretty similar. I've seen quite a few e-commerce customers say push back on, let's say, the lines that they're launching. So instead of going into launching 3 or 4 lines, they may just cut back and only have 1 or 2 lines which they're solely launching and solely focusing on, as well as the stock that they're purchasing, the stock that they're holding. They're being way more specific in terms of how much stock they're holding on hand each month or each quarter by quarter, just because it's a very uncertain market in terms of the shipping costs, fuel costs that are going up as well. So it's putting a little bite on everything, but at the same time, there's smart ways to work around things. So let's say, for example, you're cutting back on A, but B, you're seeing a reflux or influx of revenue on the other side. There's more profit to be made. So it's kind of a gift and a take. It's a gift and a curse, I would say. It makes a lot more companies act a lot more smarter. That's what I'm seeing. So the companies that are being successful and still continuing to grow are being a lot smarter in just the ways they maneuver and circumvent.
I think from our perspective as well, we've got a similar trend that's there, actually. Those that are developing unique products and those that are developing things that are not just sort of like to a penny or something like that, but there are actually some thought and there's some value in it. And we're finding that those products are again still being very, very successful. So I totally hear what you're saying there.
I also think as well that obviously there was a lot of press given, particularly from the middle of last year towards the back end of last year, with winter coming and the rise of energy costs and all of those kind of things around the cost of living crisis and the effect that would have on consumer confidence. But I have seen a few almost green shoots of optimism coming from certain parts of the market, that consumer confidence, whilst it was maybe 6 months ago an all-time low, it's rebounding slightly. Maybe we're seeing slightly dovish sounds from the Bank of England, for example, on perhaps rates should be held. I think the Fed sounds slightly different, but maybe we're starting to see the light at the end of the tunnel. It could be a little bit premature of me saying that, but as you say, Mike, certainly the businesses that have got uniqueness, they've got defensibility around their products, and I always say this is kind of my typical refrain, but the ones that are able to continue to attract the share of their typical customers' wallets. So, i.e., if your customer, let's say 12 months ago had $300 spare every single month, you may have been allocated X amount of that for your purchase of Y products. If fast forward to now, it's $150, because of all the rising costs and that kind of stuff.
Yeah.
If you can continue to stay within that purchasing decision, and people will still go back and buy your products for whatever reason, even if it's discretionary, because most people will still look to buy in the discretionary space at some point during the month. And how to stay in that, then I think you're doing a super good job at the moment.
Fantastic. I think, yeah, that's a brilliant piece of advice. Thank you. So I suppose that leads me on to my next question, which is what strategies can sellers implement to lower their costs while continuing their expansion journey? I'll give that one to Luke. Luke, what do you think of that one?
So in terms of the strategies that they can implement, one thing would be looking at obviously their banking infrastructure. So if they're looking to expand into another sector, let's say they're a UK seller, they're looking to expand into Europe, the banking infrastructure is going to be one of the first main things that you need to look at. How are you going to receive these euros in a economic way for you to save costs on receiving the funds, as well as paying your VAT, which I'm guessing is a good one for yourselves, which you can sort out on that side of things. Those are going to be some of the main breadwinners, as well as logistics, planning, preparation, warehousing. All of those are going to be kind of the main first steps which a seller needs to take into account, first of all, and secondly, map out to see if it actually works within their kind of structure and their remit of their business. Those are the main things.
Okay. I suppose from my perspective as well, as you mentioned, the taxes, it's a very important thing, because you have to obviously have compliance in order to be able to sell and continue selling. And so from our perspective, and speaking purely from an accounts and tax point of view, I think that is one of the most important ones to consider as you continue to grow and expand cross borders. Mike, what do you think about that one?
Yeah, I mean, really good points from the both of you, to be honest. I think, at the moment, I think it makes sense to look at every line item in a P&L. And if you can rationalize it, if you can do certain things, with lower, fixed liabilities, then you should look at ways to do that, outsourcing certain things, having break clauses on stuff, testing things and making sure that, can you do X thing, even 20% cheaper, 15% cheaper. All of these things are really good to do. Do you have a bunch of different subscriptions that you don't need that you can get rid of? All of those kind of things make sense. But I also think as well, to flip it on its head, if you are looking at expansion, obviously expansion requires a level of growth, a level of conviction and investment. So what you then need to do is you need to make sure that there is a market in whichever geography it is that you're focusing on. That there are going to be buyers there for your product, and also that the product that you're selling in that market is going to give you the highest possible ROI versus the investment that you're making. And just by doing that and investing in that, and maybe leaving alone some of the products that have worse unit economics or less attractive unit economics, your bottom line will be much better as a result of that. So they're kind of two sides to the same coin.
Absolutely. I think from our perspective, I think if you're looking to expand and looking to continue your journey, you definitely need to be looking at things like what's the impact of my products in the new marketplace. So what do I need to do to make sure my product can sell? Is there a localization element that I need to undertake? I think you need to consider currency. You need to look at how you're going to make and receive those payments. Are you going to be using your local bank account? Probably not. And that's leading on to one of my next questions, actually. But I think it's very important to say that when strategizing for the future, you need to make sure that you're doing planning and you're researching, as well as you're putting rock solid business plans in place to support you. And I think that's something that's very keen from my perspective, is to make sure that everybody has got those things in place as they're beginning to expand their businesses overseas. So with the strategies in mind, obviously if I'm looking to go from say one region, say in the US, and I'm looking to now break into the UK and the EU markets, obviously I'm going to need to keep my US business still trading. I'm going to need to keep the stock levels up there, but I may not have all of the money that I need available. So my next question is at what point does a seller need to consider a new funding solution, and how can they work this into cash flow and basically alleviate any problems and strains within the business? And I'll make this an open question to whoever wants to answer this one first.
Okay.
Okay,
that's my area. Sorry, Luke. So yeah, look, I probably would say this, but I think you should be looking at your funding options, or however you want to say it, funding solutions within your business very, very regularly, at least quarterly, to be honest. Because your business requirements can change pretty rapidly. Your cash balance can change rapidly, your stock can change rapidly. You can have positive shocks that mean you require funding. You can have negative shocks that mean you require funding, and they can happen almost overnight, especially in the e-commerce business. A lot of things happen, and one quarter is rarely the same as the next. So I really think you should be looking at that a lot. You should always be making sure that you know how much credit you have available to utilize at any one time. So one thing that's super important is knowing, okay, if you've got a clearing bank relationship, or a relationship with one of the other banks out there, wherever in the world it is, do you have an overdraft that you can pull on? How much does it cost? What are the conditions? How much do you have available? Do you have additional funding alongside that you can pull on? Is there, basically understand all of that and see the different types of funding as almost like a Swiss Army knife. So understand how and when and how quickly you can utilize that, and know what the restrictions are, either of use of that type of funding, or whatever other restrictions there might be, T's and C's and all that kind of stuff. It makes a lot of sense. And I also think as well, one thing that a lot of businesses probably get wrong is they leave it too late to look for funding, and they might go to the market when actually the need or the requirement becomes a need, and it becomes, we really need that money because it's, we're running out of runway, or, we're in a really tight spot. And one thing that's, really evident if you've worked in a lender, or any lenders well, is that lenders don't love to see distress, because that, even though that's when you need the money the most, it sends alarm bells that perhaps cash management within the business or whatever isn't quite as it should be. So the sort of slightly odd advice that I would give then is look for money when you feel like you need it the least, because when you're in the healthiest position, that's the time to go and look for it, because that's when lenders will look to lend to you. That's when investors will look to invest in you, and that's the best time to go. So just a little bit of advice for anyone who's kind of weighing up for when to go for that.
Fantastic, excellent. Luke, do you have anything you want to add there?
Yeah, sure thing. I mean, there was a few things that Michael said that were quite on point with quite a few customers that we deal with on a regular basis. Yes, be looking for funds not as soon as you need them. Plan in advance, because we do see a lot of customers that come into the marketplace. They need funds for specific time frame, normally a short time frame, talking about 2 to 3 weeks at the latest, which causes panic, causes you to have a few issues along the line. Maybe you don't reach that deadline. So yeah, like the main things are cash is king. So what you want to do is plan that in advance. You want to know that I do have access to X amount of funds if need be, if I need to say purchase extra stock, do X, Y, and Z with the business. So yeah, I would say plan ahead. Make sure you have access to extra sources of funds, even if it's not needed. It's always good to have that security there in the background just in case. Or if an opportunity does arise where you can take advantage of that, you have the extra sources of funds for you to go ahead and take advantage of that opportunity. Yeah.
Okay, thank you. Because obviously you both obviously offer those sorts of solutions as well. I think one of the key things I'm thinking as a seller, if I was growing business cross border, if I needed to fund additional stock and things like that in inventory, I mean, can you use your inventory? Can you use your funding to do things like funding stock and to expand your business cross borders?
Yeah, you can. You know, some lenders in the market will have certain restrictions on what you can use the funding for. Others will just look to understand the funding reason, and you'll get, you know, let's say $100,000 into your bank account, and you can use it as you wish. SellersFunding are one of those lenders that will give you a lump sum. But inventory financing or stock financing is, you know, probably a top 3 reason that the e-commerce businesses, you know, in particular, will look for financing. That's very, very common. And you know, e-commerce is quite a cash-hungry business, and you know, one of the things that you want to avoid is running out of stock for a SKU that's flying off the shelves, because that's every day, every week that stock is missing and out of stock. You know, you're missing out on revenue, and B, you're possibly providing a little bit of a chance for your clients who are coming to you to research competitors or other products that they might go to instead. So it's a kind of a short-term and a medium-term risk to your business to do that. So you always want to make sure that you're managing those stock levels and you've got the finance available to pull on to be able to reach that demand. There's obviously a load of other things in there. You know, from a finance perspective, it sounds very easy, but from an operational perspective, not so. But yeah, it's obviously, you know, really, really key to understand that. I think as well, that leads me on to, I call it a Swiss Army knife of options. You know, there's a bigger knife, a medium knife, and there's a corkscrew often. You know, all these different things you can use for them. And I think with funding, it's the same. So for example, inventory or stock financing, normally you'll utilize X amount and it will wash through and you'll need to use it again and again. Whereas if you're financing for growth and you're looking at, you know, medium to long-term growth, you might require something more like a 2 to 3 year loan profile, you know, with something that you can put towards slightly longer term growth aspirations. And then, you know, if you're a brand who decides, okay, I want to go on the shelves in Holland and Barrett and Waitrose and, you know, et cetera, and kind of spread my risk that way, which a lot of brands are looking omni-channel now. Then you might be able to look at another type of financing like invoice factoring, for example, where you can take the Holland and Barrett invoice and you can, you know, finance your working capital that way. So they give you an invoice for 80,000 USD and you factor 80% of that, bring that into the business early, use that to finance, you know, whatever your working capital cycle is there, and it gets repaid when that's paid. So there's loads of different ways you can do it. And the good thing about it is that the majority of lenders in this space, if we're in this space, we understand the various different struggles from a working capital standpoint that e-commerce businesses have. And, you know, a lot of them are able to fund from quite an early stage as well, you know, 3 to 6 months of trading plus. So, you know, you don't have to have been selling, you know, with really good margins for many years to access a lot of those different options that I've said.
Okay, it seems like there's lots of different options depending on what your business is and where your business is going. I think it's absolutely amazing. I think if you're growing and expanding your business, you need options. You need the ability to basically have multiple things on the table, I think, and that's some of those options are very good. And one of the questions I was going to quickly ask was, what are a few of those other situations? But I think you answered that as well within the within your answer as well.
The same wavelength, Mike.
Absolutely, yeah. Luke, what about from a cash flow standpoint and streamlining? So obviously, as you're going to be moving cross borders, you're going to be obviously dealing with multiple currencies and international payments. So from your perspective, how can you save costs on those border transactions, and how can you also, I don't know, tie that into the funding solutions as well?
Yeah, so I mean, the fees and the charges that most businesses incur when they are transacting cross-borderly is kind of one of the main things that we focus on. So whether that's your business in the UK, let's say your business in the UK, you purchase your stock from China, which is in dollars, there's a conversion there that you're going to have to pay for. Let's say your storefront is in the US, so you're actually selling product to the US, and then you're receiving those funds in dollars back into your UK British bank account. That's another conversion fee that you're going to hit there, as well as paying your tax in the US. You may have to convert those British pounds into dollars to pay your tax, so that's another conversion that you're going to hit there. Here at Payoneer, we kind of tailor that all in one. So what we will do is we'll give you a receiving account for all the major currencies, as well as any other kind of local currencies that you may need to transact in, which kind of solves that issue for you. So for example, you're an Amazon seller, you pay your suppliers in dollars, you can use your US dollar account that you've received your dollars from Amazon into, pay your suppliers, as well as pay your VAT, your tax in US dollars. You avoid the conversion fees on that side of things, and then when it's time to convert those dollars back to British pounds, that's where we kind of do our magic and get you a cheaper fee and a cheaper rate on converting those fees back into British pounds. A lot of e-commerce customers don't know this process, and they are still kind of using the banks, which they are killing them on the conversion fees as well. And
how much can you save by just consolidating that?
Well, it all depends on how much a seller is selling, but on average, we can save you anywhere between $500 to $2,000 or pounds in terms of conversion fees and the cost of it, and actually having it all in one place. Because remember, a lot of companies may have one bank account here, one bank account there, so it's not an actual visual point where they can't see what actual balances they're holding, as well as what fees are they actually being charged, because we see it on a regular basis. A customer might be sending a payment out in euros from their GBP account, and they do not exactly know what fee they're being charged for that.
No, I can imagine. I mean, you go on holiday and you're doing something similar. You're drawing money out of a cash point. You've got exactly the same problem. And I mean, I wised up to that a couple of years ago when I decided to actually, I'll use one of these cards that you can use where you literally you load money onto the card. You do one currency transaction, and so why would you not do something like that for your business as well? Because if you're going to be trading backwards and forwards in US dollars, GBP and euros, you're going to be using those three currencies. You're going to need to make sure you're not constantly paying those fees backwards and forwards, because you're going to hemorrhage money at the bank exchange rates. That's going to be awful.
Exactly. Streamlining the process is kind of the key for you to increase your general revenue, increase your sales profits on that side of things, and it just gives you a visual key kind of focus on what is actually coming in, what's going out, what you're paying for, where your profit margins are. It's a lot more easy for you to track and see with using a system that we have in place as well. And it also gives you access to marketplaces too. So for example, if you're looking to sell into the US, we can provide you with a local US bank account in order for you to access those US marketplaces. So it does have a lot of other features on there, which is great for sellers on that side of things.
Oh, brilliant. Okay. So a seller can basically save a lot of money and streamline all of their payments just by using one of these multi-currency accounts, which goes cross-border.
Yep, exactly that. They can streamline their payments. They'll save on cross-border transactions. It will make it a lot easier for them to actually see profit margins coming in and out, as well as paying their suppliers too. That is another huge thing that we're focusing on customers doing too.
Sorry, that was Payoneer.
Focusing on their suppliers, so their supplier payments.
Yeah. So yeah, the supplier payments. Okay.
Yeah.
That's fine. Sorry. Sorry about that. Mike, from your standpoint, how can this link into the funding streams as well?
It's a very good question. So, obviously, growth in international markets is going to necessitate payments going back and forth. You're going to be, let's say you're headquartered in the UK and you're setting up with the help of AVASK into Germany and the US. You're obviously going to have euro and US interchange. It's not just one way, it's two ways, as Luke said. You've got finance probably going back and forth as well, whether you're setting up different entities. Structure is obviously an interesting one. I think you guys would probably get involved in that side too. But I think payments and finance are both. My approach to it would be very, very similar. In that, basically, there's kind of two things that people look for in finance. I think it's sort of price. So price is probably one of the number one things. So how can you achieve the cheapest price point for the product that you're after? So whether that's the FX fees that you're paying, the interchange, whatever that is, or it's just the kind of pure all-in APR costs of the funding that you're getting. But I also think as well, a lot of times people possibly neglect the other side of the Venn diagram, which is the usability aspects. And does this particular product, is it kind of fit for purpose, and how well does it work? So the Payoneer digital wallet sounds like it works really well, and you're working on the supplier side as well. So how well is that going to work for a client? And then you also have to think about on the finance side as well. Going back to my points on the different types of funding that you're using, it probably doesn't make a huge amount of sense to get a 5-year term loan to finance 3-month worth turn of stock, because unless you're going back in and refinancing that with no early repayment charge, which is relatively unlikely in the current market, that probably wasn't fit for purpose. But you may have gone in and thought this was the cheapest type of finance that I could find at the time. So I think the word streamlining, you've got the pricing aspect, which is obviously one aspect which is super important, but then also operationally and from a usability perspective, is this fit for purpose for my organization? Am I able to in an easy way for me and the way that my business is set up, to use both products, and do both products actually interact with each other well? Because operationally, you've got to make sure that your finance and your tech stack, as you might call it, are all communicative and they're all working well. At the moment, everything's basically API'd. We API into Amazon and loads of different marketplaces that you can use as a D2C brand, as an e-commerce seller. And into that, we also will API into likes of Checkout and Stripe and all of that kind of stuff. And all of these different marketplaces and tech stacks are able to kind of connect in with each other. We're at that point now. So making sure that everything is usable, I think also that is very key to streamlining as well. That would be my takeaway. I think I look at it very much of two sides to the same coin, to be honest.
Okay, yeah, no, it does seem that way, and I think as you've both mentioned, being able to pay suppliers and then pay withdraw funds from Amazon when you've got when you're obviously sold the products, and then when you're paying taxes, to be able to use those products all together, it seems like a very important thing that people need to get on top of, especially when you consider the amount of monies and the amount of savings in the volumes that you're talking about. So I suppose my next question is, we've seen what's happening at the moment. If you're looking to expand your business in 2023, what would be the first thing that you would be considering as a piece of advice for a seller if they are, say, just in one marketplace and looking to expand into two, or they're in two and they're looking to expand into three? What would you suggest for this for these sellers going forward in 2023?
I would say a few things you got to look at is the marketplace that you're looking to expand into. So what is working in that marketplace? What products do you actually stock at the moment that could potentially work? If not, what products are potentially working in that marketplace, and how logistically is it easy for you to get those in play? So receive those, purchase those. Those are all kind of the major three things that I would first start off looking at. Secondly would be the infrastructure side of things. So have you got the banking infrastructure in place? Financial side of things, are you going to need a cash flow boost to get all these products in place? Those are kind of the main starting points of before you even branch into that side of things is what you're going to have to look into, I would say.
Absolutely. I think that there's a very key points you've just made there. Yes, make sure you know the product and you've done your research and you've looked before you've started the leap and you've started going forward. No, absolutely. What about you, Mike?
Yeah, I agree. Look before you leap is key. Understanding that market, as Luke said. Is there a market for you to go after, and how big is it? What's the potential? What is your ROI? Once your product goes into the hands of your customer and you can, roll up all of the costs of having sold that one product to a customer, how does that look? And I think, looping the expertise of people like AVASK makes a lot of sense. So what are the pitfalls at the moment for launching X product in Germany, for example? And I think all of the different tax implications and everything like that is all going to impact your bottom line at the end of the day. Net profit is after tax. That's a super important thing to keep in mind. And I think that's probably where I would start. If I was a little bit unsure of where to go, I'd probably enlist someone like AVASK to do that, help me with that initial scoping. But I also think as well, it's pretty well understood now that the era of kind of growth before everything is sort of over for now, at least. And just being able to ship a load of product into one market isn't enough anymore, especially if you want to continue financing your business. And if you want your business to keep growing and be able to keep financing that, you're going to have to make sure that actually that flows down into your bottom line and you're making money out of that. Otherwise, there's not a huge amount of point at the moment because it's going to be tough. So making sure I keep banging on about this point, but I'll keep banging on about it more, that the unit economics are there. You're investing in something that people want, is going to continue to capture that share of wallet of clients. You've done your scoping, you find there's a big enough market for you to go into. What are the potential financial risks, tax implications, all of that kind of stuff. Once you've got all of those ducks in a row, I think you probably stand a good chance. There's always a little bit of a leap of faith, I think, and that's the leap aspect that you mentioned there, Mike. But I think, to be honest, at the moment, obviously, we've talked a lot about the headwinds that we've got, the cost environment. Consumers are not as confident as they were 18 months ago, 24 months ago. That's pretty obvious. But hopefully we're heading into a period of time where those headwinds will start to feel slightly less strong, and we might start to see some tailwinds coming.
Yeah,
you never know. Maybe we'll be lucky enough to start seeing those towards the back end of this year. But I think as well, one of the really important things that probably leads me back to the funding piece as well, and the points that we've spoken about quite a lot, is you've got to be ready to take an opportunity when it comes. So we've got one of those periods of time, I think, at the moment where there's a lot of shifting tectonic plates and a lot of different things going on in the world. But if you've got a product that becomes, or you sort of see that there's a demand for it, or if you understand that there's something that you could potentially go into where actually it makes a lot of sense within the confines of your business and your strategy that you've got for yourself, make sure that you've got the ability to take that, whether that's from the financial perspective or you can get the right advice, put all of these things in place so that actually you can make a move, because someone otherwise is going to make that move instead of you. And you don't really want to be in a position where you think, oh, crap, I could have done that. I had that idea. I was going to do that. And someone was a little bit braver than me who made that happen, because, a lot of people say that the best businesses are made in times that are tough. And, if you can make it to the other side and you can continue to capture market share in whatever geography it is, then, you're doing an awesome job.
Thank you. That's really useful. I think I totally agree with quite a lot of the things you've said. I think one of the things that really did resonate with me was absolutely you've got to know your cost of goods. You need to know exactly how much profit margin you've got, exactly how much money you're going to be left with after you've paid everything out, after you've done everything. You need to make sure that you know those costs before you actually start looking towards expansion. And once you have started looking into expansion, you then need to consider all those additional variables that you're going to need to do. And yes, you're probably, as you start the expansion journey, you probably will lose a little bit of money in the short term, because you're going to have to invest that money and you're going to have to keep investing that money. But it's not really a loss, because you're using that money to build a much more diversely and strategic brand, which is basically able to weather the storms a lot more. I think it's very
good
key.
point.
Very
actually
key.
I recently spoke to someone who runs a company that does a lot of work with expansion into China for certain industries, and having a very deep knowledge of one market. China is like a $1.3 trillion e-commerce market, for example. It's one that not a lot of people in the West know that much about, but it's there, and we know that it's there. And he said to me that actually, if you launch a product into China, regardless of whether it gets traction quickly or not, you're likely to lose money in that first 18 months, sometimes 24 months, because of all of the associated costs that you say. There's upfront investment, there's all of these other things, and you need to hit a certain inflection point before that starts to pay dividends. But if you're able to go into a market that's big enough and you've done your work and you say, right, if I hit this point and model it, and we can get there in 18 months, at this point, that suddenly, like the hockey stick, the profits start to come. If you've done that work properly, the payback is likely to be pretty big. Hopefully in most markets, the profit payback isn't going to take you 18 months, but I think it's an interesting one, isn't it? A little bit of delayed gratification, but it can certainly pay dividends for sure.
Absolutely. Okay, well, we are coming up to time very shortly, so I thought I'd just ask both of my guests for their final thoughts, I should say, for the afternoon. So, what would your final thoughts and your piece of advice for anybody that's listening be?
I can start. I would say, like I mentioned earlier, I'm an optimist, so I would say don't be afraid to invest. Be greedy whilst others are fearful, I think is the way that the quote goes. If you've got high conviction, your numbers, you've done the math, you understand the market that you're going after. Make a play for it. I think to a certain extent, this year is about staying in the game and making sure you make it to the other side. So that's one side of it. But I also think if you've got something really interesting, don't die wandering. Go and make it happen, because there's going to be probably 8 out of 10 other people that are looking at the same opportunity who make the decision not to do that. So if you're the one that does it, your potential upside is much, much bigger.
Brilliant. Okay, thank you very much for that, Mike. And Luke?
Yeah, I would say, first of all, have a plan. So make sure if you're looking to expand, you take note of what's working in that sector. If it is e-commerce side of things, what items, what sections are working, infrastructure in terms of your banking side of things, receiving funds, sending funds, the tax, how you're going to pay the tax, as well as the cash flow side of things too. So how much is it going to cost for you to do this expansion? Do you have those reserves in play? As well as, if you do need those reserves, do you have the set order in play for you to actually receive those funds, or have those backup sources of funds in play for you to execute your plan? Like Michael said, don't be fearful. If the numbers work, go for it. If everything is in play, it should pay off in the next few months or years, but you have to stick at it, because that's where majority of people fall off. They do it for 1 or 2 months, try and jump onto a new product, do it for 1 or 2 months, jump onto a new product, where if potentially you stuck at that original product, which was actually showing you the signs of working, you would have saw the fruits of labor later on down the line.
Absolutely. Thank you so much, Luke. That's very, very sage advice. From my perspective, I think it's very important that you ensure that you know what your next step is, and look before you leap. Always make sure you've got a plan in place, and make sure that plan is resilient. I think that's my final thought for the day as well. So I'm just going to say now a very quick thank you to both of my guests, Mike Cass from SellersFunding and Luke Fagan from Payoneer. Thank you so much for joining me this evening. It's been absolutely wonderful talking to you both. So if you want to get in contact with either Luke or Michael, you can obviously use the details that are just displayed on the bottom of the screen just here now. They'll be available to answer any of your questions you might have. Please do get in contact with SellersFunding or Payoneer if you do require their services. I'm sure both Mike and Luke will be very, very happy to hear from you guys. And don't forget to mention that you saw that you saw them on the Global Expanders. That would be absolutely fantastic. From me,
thanks for having me, Mike.
That's great, and thank you so much for joining me, both of you guys. We hope you've enjoyed tonight.
Thank you. It's been a pleasure.
Absolutely, and I'm looking forward to spending some more time with you guys. I'm hoping you guys are going to come back and be my guest again sometime soon. Yes.
Sure, happy to. Anytime.
Of course, absolutely.
Thank you very much. Okay, so thank you very much for joining us this evening. We'll be back next week again, our next streaming episode of the Global Expanders. We're going to be focusing on localization. So we'll be talking to a couple of people about how you can localize your products and how you can basically make traction in those markets. So from all of us here at the Global Expanders, thank you very much for joining us this evening, and we look forward to seeing you again at the next episode. So thank you very much, and have a great day.